The markets, we have faded the Le Pen tail risk throughout the week. We've seen a stronger euro. We've seen narrower spreads over Germany. How much of a political risk premium is still in the market that needs to come out, be stripped out in the next 24 hours?
Well, in my mind, not that much. We may see some relief rally tomorrow again, but a lot has been priced in already since the outcome of the first round, as you mentioned it. We have a CAC 40, which is at roughly 11% year to date. We have bank stocks in Europe, which are at 15% year to date. The French spread over Germany has dropped to 40 basis points or slightly lower, which is more or less to the historical lows, at least over the past 10 years. We have seen the euro rise quite substantially, but obviously with the payrolls of last week in the US, this process has slowed a bit. I guess on equity market, it is evident that we will see a further rise of European equity market. The fact that the political risk, the aspect of the risk of having a Frexit in Europe has disappeared will definitely attract global investors towards Europe. And I would say even more so because since the first round of the French election, we also received a lot of macroeconomic data. I'm thinking about the GDP figure for the first quarter. I'm thinking to retail sale. We're also seeing that on the corporate level, the EPS have been quite strong as well. So there are many reasons for investors to come to Europe at this stage. Definitely know that the Frexit is no longer to be expected.
Yeah. For those long risk assets, though, is the politics completely over? We have the parliamentary elections in just over a month's time in France. We're set for the Italian elections seemingly in the next 12 months, 18 months as well. Can you really dismiss the politics and get long Europe in an aggressive way that would put you in line with where the data has been?
Well, I guess at this stage we can, and obviously you mentioned the legislative election, and there's definitely something which could dampen a bit the enthusiasm that we have at this stage. We've seen the first result about Emmanuel Macron victory, 65% of the vote at this stage. This is good, but it is much lower than what Jacques Chirac got in 2002 when he was opposed to Jean-Marie Le Pen. So it is not a clear-cut victory from that perspective, and this victory leaves France deeply divided. This is shown by the relatively low turnout and also by the amount of blank ballots which have been given by the French voters. So the country is deeply divided, and Emmanuel Macron, to rule the country, to form a stable government, will need to win the heart of the French people in the coming weeks. And that's very important to be sure that indeed it is not only a short-term victory, but also something which will, as Macron alluded to, open a new chapter in the French history.
Vince, the analyst community has been long Europe for a while. It's been a buy, buy, buy story. Talk to me about whether the flows has matched the rhetoric over the last couple of months. Have you seen the money start to pour into Europe yet? And do you anticipate that the flows will start to really build up in a significant way now that we've at least cleared this hurdle?
Yeah, JP Morgan, we tracked obviously the flows in most asset class, and especially at this time of the year, obviously in the Europe equity market. We've seen it was quite hesitant at the beginning of the year due to these political uncertainties, but since the first round of the French election, we've seen flows coming in on the market, and not only hot money in ETF, but you start to see also these flows taking place in mutual funds, in more long-term money coming to Europe. And we've seen that, we have experienced that based on a discussion with Asian US-based client, which awaited to get this green light from the French politic to get back into Europe. And frankly, there are a lot of political concern for the future, and you mentioned it, Italy, the legislative election in France, but pure from a fundamental perspective, it's time to get back to fundamentals and to get back to Europe from that.
Vincent Juvin, Global Market Strategy.